Welcome back to Dinar Current, your source for the latest insights. Today, we're re-tackling a massive topic that has been buzzing in financial circles. The possibility of a global currency reset. What does it mean? Is it actually coming? And most importantly, what could it mean for the Iraqi dinar? In recent years, you've probably heard the term currency reset thrown around a lot. With record high global debt, rising geopolitical tensions, and huge shifts in energy markets, many are speculating that the world's financial system is heading for a major shakeup. And right in the middle of this conversation is the Iraqi dinar, a currency that has been the subject of revaluation hopes for years. So, let's break it down. First, what exactly is a currency reset? Simply put, it's a major restructuring of currencies, either within a single country or on a global scale. This could mean a revaluation, where a currency's value goes up, a devaluation where it goes down, or even fundamental changes to the entire monetary system. We've seen this before in history. Think about the Bretton Woods Agreement in 1944, which made the US dollar the world's primary reserve currency, or the Nixon shock in 1971, which ended the dollar's direct convertibility to gold and led to the floating exchange rates we have today. A reset doesn't happen overnight, but it reflects massive shifts in global economic power. So, what global forces are pushing us toward a potential reset right now? There are several big ones. First, global debt is at an all-time high. Governments, corporations, and households are all swimming in debt. When these levels become unsustainable, countries start looking for ways out, and restructuring their currency is one option to stabilize their economies. Second, the world is becoming more multipolar. The US is no longer the only major player on the world stage. Emerging economies are gaining influence, and as that power shifts, so does currency dominance. We're seeing a clear trend of de-dollarization, where countries like China, Russia, and even nations in the Middle East are actively reducing their reliance on the US dollar for trade and reserves. This naturally creates pressure for a global currency realignment. Third, energy markets are incredibly volatile. For oil exporting countries like Iraq, the price of oil directly impacts their government budgets, foreign reserves, and the strength of their currency. Major fluctuations can force a country to rethink its entire monetary strategy. Finally, we have the digital currency revolution. Central bank digital currencies, or CBDCs, and blockchain technology are changing the game. They could enable new monetary policies, faster global transactions, and deeper financial integration. This technological wave could be the very catalyst that triggers broader currency adjustments worldwide. Now, let's bring this back to the Iraqi dinar. For years, the dinar has been a focal point of international attention. Thanks to Iraq. Immense economic potential and oil wealth. But can it really benefit from these massive global shifts? To answer that, we need to look at both its strengths and its weaknesses. On the strength side, Iraq's biggest asset is its massive oil reserves. It's one of the top oil-producing countries in the world, and that oil revenue is the backbone of its economy. This provides a powerful foundation for currency, stabilization, and a potential future revaluation. Iraq also has a strategic location in the Middle East, giving it access to key regional markets and trade partnerships. Furthermore, the government has been pushing forward with banking, financial, and anti-corruption reforms, all designed to build investor confidence. And while there are still challenges, Iraq's political stability has generally been improving. However, we also have to be realistic about the challenges. Iraq's economy is heavily dependent on oil, which makes it extremely vulnerable to price swings. The country also struggles with high inflation and a large cash-based economy, which makes it harder for the central bank to maintain stability. Corruption and bureaucracy are still significant hurdles that can slow down economic progress and scare away foreign investment. Lastly, Iraq works closely with international bodies like the IMF and the World Bank. While this provides guidance, it also limits the country's flexibility to make sudden, independent policy changes, like an overnight revaluation. So, could a global currency reset actually boost the Iraqi dinar? There are two main schools of thought here. The optimistic view is that a global reset would create the perfect conditions for the dinar to thrive. A new financial system could make Iraq's currency more attractive on the world stage, leading to increased foreign investment. In a world scrambling for stable assets, oil-backed economies like Iraq could gain significant leverage. But there's also a more cautious view. Skeptics argue that a global reset doesn't automatically mean a dinar revaluation. A stronger dinar depends on Iraq getting its own house in order first. Without a strong domestic economy, political stability, effective monetary policies, and full transparency in its banking and trade, a global reset might not have any meaningful impact on the dinar's value in the short term. This brings us to the most critical question. What needs to happen within Iraq for a dinar revaluation to become a reality? Even if global conditions are perfect, Iraq must focus on key internal reforms. First and foremost is modernizing its banking system. This means fully embracing digital banking, implementing strict anti-money laundering measures, and aligning with international financial standards. A credible, modern banking sector is non-negotiable for building global trust. Second, Iraq must diversify its economy. The country cannot rely on oil forever. Developing other sectors like agriculture, manufacturing, tourism, and technology is essential for creating a resilient economy that can withstand shocks in the energy market. Third, political and governance stability is crucial. Tackling corruption and ensuring transparent government policies will build confidence among both foreign investors and Iraqi citizens. Fourth, Iraq needs to manage its oil sector effectively. It's about maximizing revenue when prices are high, while also protecting the budget against volatility. Steady government income is key. Fifth, the Central Bank of Iraq must maintain a predictable and transparent monetary policy, backed by sufficient foreign reserves. This is what gives it the power to defend the dinar's value on international markets. And finally, public confidence is everything. The government and central bank need to promote the dinar's stability and encourage citizens to use their own currency for savings and daily transactions. This strengthens domestic trust and reduces reliance on foreign currencies. Now, let's talk about timing. Even if Iraq does everything right internally, the revaluation of the dinar still depends on external factors. Stable or rising oil prices would obviously create a favorable environment. Peace and security across the Middle East are also vital for investor confidence. And, of course, major shifts in the value of the US dollar, the euro, and other key currencies will directly impact the dinar's exchange rate potential. So, what are the experts saying? As you might guess, financial analysts are divided. Some believe a global financial realignment is coming and that it will naturally favor resource-backed economies like Iraq. Others are more cautious, arguing that without deep structural reforms inside the country, the dinar's value is likely to remain stable, regardless of what happens globally. The consensus advice for investors is to monitor Iraq's economic reforms, the oil markets, and political developments on the ground, rather than just speculating on a reset. It's also important to be aware of the risks. The dinar market is unfortunately filled with rumors and misinformation that can easily mislead people. Political risk is also a major factor. Regional conflicts or internal instability could derail progress at any moment. Global market volatility is another one. A sudden crash in oil prices or a geopolitical crisis could change everything. And remember, international oversight from bodies like the IMF might restrict Iraq from making the kind of sudden currency changes that some speculators are hoping for. To wrap it all up, the idea of a global currency reset is very real. It's being driven by massive debt, shifting global power, and new technology. For Iraq and its dinar, this could represent a historic opportunity, but it is by no means a guaranteed path to a revaluation. The future of the Iraqi dinar ultimately depends on Iraq itself. It hinges on the nation's commitment to internal reforms, modernizing its banks, diversifying its economy, ensuring political stability, managing its oil wealth wisely, and building public trust. If these internal efforts align with favorable global conditions, then a realistic path toward a stronger, more valuable dinar could truly open up. Our advice: approach this topic with patience and a healthy dose of caution. Focus on the long-term developments and the tangible progress on the ground, rather than getting caught up in short-term speculation. The journey of the Iraqi dinar is a marathon, not a sprint. Thanks for joining us on Dinar Current. If you found this breakdown helpful, be sure to like, subscribe, and hit that notification bell so you never miss an update. We'll see you in the next video.